What if you could peek behind the velvet curtain of the beauty industry and truly understand what makes a global giant tick?
Hmm.
Today, we're doing just that, digging into the Estee Lauder Companies Inc., uh, EL, a name that's basically synonymous with prestige beauty.
Exactly.
Yeah.
Yeah, and we've been going through a pretty detailed research report from Compasscope, plus their latest Q3 earnings call for 2025.
Right.
We're trying to pull out all the key stuff for you. Think of it as, your shortcut to getting a handle on this major player.
Okay, so our mission today is pretty clear. We want to unpack the essentials about EL's business, who they're competing against, their plans for growth, the risks involved, how they've been doing lately, and crucially, what you should be watching going forward.
Yep. We'll cover their business lines, the competitive scene, growth plans, execution risks, recent news, and those keys to watch.
All right, let's dive in. Where do we start?
Well, first off, you need to know that Estee Lauder is all about high performance, prestige beauty. They're playing squarely in that premium end of the market.
Okay, a premium focus. And they operate across several areas, right? I think five main ones.
That's right. 5 key lines of business. First up is skincare.
Ah, the big one. This is where you find things like moisturizers, serums, cleansers.
Exactly. And the brands here are heavy hitters. Estee Lauder itself, Clinique, the Superlux La Mer, Origins, and newer ones like Dr. Jart Plus and The Ordinary, which has become really popular.
Yeah, what's next?
Then you've got makeup, think foundation, lipsticks, mascara, eyeshadow, all that.
And the brands, still Estee Lauder and Clinique.
Yep, them again plus MAC, Bobbi Brown, Smashbox, and Too Faced, which is pretty trend-focused.
Okay, skincare, makeup, number 3.
Fragrance. This includes fine perfumes, colognes.
Right, like Jo Malone London, I know that one.
Precisely. Jo Malone, Erin, Tom Ford Beauty, which is a big one for them, Le Labo, and the more niche, high-end additions to Parfum Frederic Malle.
Okay, luxury sense. What else?
Then there's hair care. Not quite as big as skincare or makeup, but still important. Brands here are Aveda and Bumble and Bumble. Shampoos, treatments, that kind of thing.
Aveda, right. And the last category, you said 5.
The fifth is kind of an other bucket. This covers things like beauty accessories, but also some key licensing deals. The big one there is their agreement with Tom Ford, which goes beyond just fragrance now.
Interesting. So even with all these different areas, where does most of the money come from?
Yeah, that's a key point. The vast majority of their revenue, the real engine, comes from those core categories, particularly premium skincare and makeup. That's where their bread and butter is.
Okay, makes sense. So knowing what they sell, how do they actually stack up against the competition? What gives them an edge?
Good question. A major strength is definitely their premium-focused brand portfolio.
So that focus on high end is an advantage in itself.
Absolutely.
Yeah.
They lead in key segments like skincare and makeup. Brands like La Mer, Clinique, Estee Lauder, they have huge global recognition, real loyalty. And then they have those ultra-luxury names like Jo Malone and Le Labo that give them an edge at the very top end.
And how does that translate into like business strength?
Well, it drives what we'd call a strong competitive advantage. You've got the power of those brands, the equity they've built up, plus their sheer scale gives them cost advantages in buying materials, advertising, getting products out there. And that historically has led to really healthy gross margins for them.
Right. Scale helps the bottom line.
Yep.
And getting products to people. How strong are they there? Their distribution.
That's another key piece, channel strength. They often get prime placement in high-end department stores, specialty shops like Sephora.
Right.
And they're a big player in travel retail, airports. Crucially, they've also built a strong omni-channel setup. Their own websites, other online retailers.
So connecting online and offline.
Exactly. And we saw proof of that working in the recent quarter. Their organic online sales grew mid-single digits. That's pretty solid.
Okay, but in beauty, you can't just rely on old favorites. What about innovation?
Definitely. Their innovation capabilities are important. They pour a lot into R&D. They do collaborations. I think they worked with Stanford. And they're using more data analytics and AI.
AI. How so?
Well, there was a recent example with Too Faced launching a new mascara. They apparently used AI for the marketing campaign and crunched what normally takes 6 months down to just 16 days.
Wow. Okay. That's agile.
Says they're trying to speed things up.
And geographically, any particular stronghold?
Yeah, their geographic leadership in premium skincare is huge. They're #1 globally in that category. And they have a really strong position in Asia Pacific, particularly China.
China keeps coming up.
It does. And it's notable that even with recent issues there, they actually gained market share in China in 3 of the last 4 quarters.
Okay, so Strong brands, scale, good distribution, innovation, leadership in skincare. Sounds pretty good. But every company has weak spots, right? What are the challenges to their competitive position? You mentioned China.
That's the big one. Their over-dependency on China. Having, like you said, 25% to 30% of your sales tied to one country makes you vulnerable.
Right. If China sneezes.
Exactly. Recent sales dips really highlighted that risk. A huge chunk of the decline was linked to issues there.
Okay, dependency on China. What else? Any product categories where they're struggling?
It seems like cosmetics and makeup weakness is a factor. They've apparently had a harder time holding on to market share in makeup compared to some rivals, like L'Oreal.
So skincare strong, makeup maybe less so. Internal challenges.
Historically, operational complexity has been mentioned. Just being a massive global company can sometimes slow things down, make it harder to pivot quickly. Cost structures can get complex.
And sticking only to the premium end. Is that a risk?
It can be. That high premium exposure alone means, unlike, say, L'Oreal, they don't have that diversification into mass market brands. So in an economic downturn, if people cut back on luxury.
They feel it more.
Right.
Precisely.
And what about new competitors? The landscape's changing, isn't it?
It really is. The rise of digital-first competitors is a definite challenge. These newer indie brands, often focused on a niche, selling direct-to-consumer online. Think Glossier, maybe Drunk Elephant before it was acquired.
How do they pose a threat?
They're often very agile, quick to jump on trends, and they build strong communities online. It's a different model.
Okay, so let's put EL side by side with some key peers. How do they compare to, say, L'Oreal?
L'Oreal's big strength is that diversification we talked about there in mass, premium, active cosmetics, professional hair, massive scale, often quicker on product development. But maybe they don't dominate that ultra-premium space quite like EL does with some brands.
Okay, and LVMH, they're big in luxury too. Yep. LVMH has incredible luxury power through brands like Dior, Givenchy, very strong in fragrance. But their skincare business and premium makeup share are generally smaller than Estee Lauder's.
What about someone like Shiseido? Known for skincare, right?
Exactly. Shiseido has deep roots and loyalty in Asia-Pacific, strong science-backed skincare. Their challenge is more about global reach outside Asia and maybe being a bit behind on the fully integrated omni-channel experience.
And those indie and niche brands.
Their strength is agility, direct connection with consumers, niche innovation. Their weakness, scale, resources, distribution. They can nip at the heels, but they don't have EL's infrastructure.
So if you had to sum up EL's competitive position.
I'd say they have a very strong defensible position in premium skincare, built on great brands and scale. But they face real challenges for their China exposure, needing more agility and intense competition, especially in makeup.
Okay, that gives us a good picture of where they stand. Now, how are they planning to navigate these challenges and grow? What's their growth strategy?
It's definitely multi-pronged. First, they want to keep riding the wave of premiumization trends. People are still willing to pay for high-end beauty, and that gives EL pricing power.
Makes sense. Lean into their strength. What else?
Global geographic expansion is key. They're actively looking at emerging markets, India, Brazil, the Middle East, to become less reliant on China.
Is there much room to grow there?
Apparently, yeah. They mentioned something like only half of their 20-plus brands are even available in places like India and Brazil right now. So, big opportunity if they get it right.
Okay, new markets and technology.
Huge focus on digital and omni-channel investments. E-commerce is already, nearly 30% of their sales. They're pushing further onto platforms like Amazon, TikTok Shop, Shopee. That online growth we mentioned shows it's working.
And new products, always important in beauty.
Absolutely. Product innovation and transformational launches. They want to speed up getting new products out. They mentioned aiming to triple fast-to-market launches, focusing on growing areas like body care, makeup that offers multiple benefits.
Any recent examples?
Yeah, they highlighted new things from Clinique's Moisture Surge line, an Estee Lauder concealer, a MAC collection, a La Mirror night product, Tom Ford lip color. Also interestingly, MAC strategically lowered the price on its Studio Fix powder in the US and UK.
Oh, really? A price cut in premium?
Yeah, shows they're willing to adjust pricing tactically, maybe to defend share.
Okay. And what about costs? You mentioned complexity earlier.
Big focus there. Margin and cost efficiency improvements through that program they call the Post-Recovery Growth Plan, or PRGP.
Right, the PRGP.
It's about restructuring, cutting fixed costs, making SG&A leaner, optimizing the supply chain, all aiming for double-digit operating margins again. They've already approved Quite a few job reductions as part of that.
Over 2,600, I think I saw.
Yeah, something like that as of late April.
Okay. And finally, the brands themselves.
Right, brand portfolio diversification, trying to breathe new life into any underperforming brands, and also scaling up those newer acquisitions like Tom Ford and The Ordinary to reach different consumers or tap into new trends.
That's quite a comprehensive strategy. How does it compare to what their peers are doing? L'Oreal, for instance.
L'Oreal, again, plays on its diversity across price points.
Hmm.
They're big on digital leadership, using AI for personalization, expanding aggressively geographically, strong R&D, and making sustainability a core pillar.
LVMH.
LVMH uses that cross-benefit from fashion
Yeah.
for the luxury halo effect. They're more selective geographically, really focus on the in-store retail experience, and fragrance remains a major strength.
And Shiseido's approach.
Shiseido plays to its regional strength in Asia, emphasizes the science in its skincare, pushes digital growth, and also has global sustainability goals.
Okay, so looking at EL's strategy, what's the potential upside? Where could it really pay off?
The revenue profit potential looks strong, especially in skincare, if they nail that premiumization trend and geographic expansion, and the margin opportunity for the PRGP is significant if they execute well.
But how achievable is all this?
That's the question. The diversification into new markets has risks. Getting makeup growing again needs real innovation wins, and scaling digital successfully is always a challenge.
So the key risks to the strategy.
Still, that China dependency looms large. Execution risk on the restructuring, can they make those changes smoothly? And just intense competitive pressure across the board.
So final thought on the growth plan.
Look, the long-term potential is definitely there, especially with their skincare leadership. But they face significant hurdles related to China and needing to prove they can be as agile and innovative as competitors like L'Oreal. Execution is everything.
Right. Execution. Let's dig into that more. What are the major business execution risks EL needs to manage carefully?
Number one, without a doubt, is that geographic dependency on China and Asia Pacific. Around 30% of sales, maybe more sometimes, highly vulnerable to anything going wrong there. Like we said, almost all of the recent sales decline was tied to China issues.
Yeah, about 93% you mentioned earlier. That's huge.
It really is. Then there's the risk around organizational complexity. Even with the PRGP trying to fix it, can they truly become nimble enough? There's always a risk of disruption during big restructurings.
The makeup category.
That cosmetic segment weakness. If they keep losing share, that's a major execution failure in a core category. They have to turn that around.
And the cost savings plan itself.
The cost structure and margin recovery. Actually achieving those targeted savings and margin improvements isn't a given. Costs could rise unexpectedly, implementation could lag, but that said, the gross margin has been expanding, which is positive.
Over 300 basis points recently, right?
Yeah, for 4 quarters running. So progress there.
What about the expansion into new markets?
Emerging markets investments. Success isn't guaranteed. You need to really connect with consumers, compete against established local players. It takes time and money, and it might not pay off as expected.
Digital transformation.
Always carries risk. Digital transformation. Scaling up, integrating online and offline smoothly, staying ahead of pure-play digital competitors. Lots of places that can trip you up.
And lastly, that premium focus again.
Yeah, the luxury-only focus. It's their strength, but also a vulnerability in downturns. Lack of diversification is an inherent risk in their model.
How do these risks stack up against their peers? L'Oreal.
L'Oreal's risk if maybe spreading itself too thin across so many brands and markets and navigating complex local rules everywhere. But their diversification really buffers them against specific regional or category downturns compared to EL.
LVMH.
LVMH is vulnerable to luxury spending cycles like EL, maybe less agile in beauty specifically because it's part of a larger conglomerate. But again, lower geographic concentration risk in beauty than EL.
Shiseido.
Shiseido shares that Asia-Pacific concentration risk and faces challenges expanding globally. But they know their core Asian consumer very well.
And the Indies.
Their risks are different, depending too much on one hit product. Challenges scaling up, running out of cash. EL has scale advantage over them, but the Indies' agility is the risk to EL.
So summing up the execution risk for Estee Lauder.
I'd say moderate to high. The China dependency and the complexity of the turnaround plan are significant hurdles. Their skincare leadership is a huge plus, but they really need to execute flawlessly. L'Oreal probably faces lower overall execution risk because of its balance.
Okay, very clear. Let's shift to what's been happening recently. Can you give us the highlights from their Q3 2025 earnings call? recent business updates?
Sure. So the headline was that organic sales fell 9%, which is pretty much what analysts expected.
Okay, expected decline.
But interestingly, if you take out travel retail, the business was only down 3%. That's actually a sequential improvement from the previous quarter.
Ah, so travel retail was the big
A
drag.
huge drag, down 28%. That really pulled the overall number down.
And profits.
Diluted EPS, so earnings per share, was down 33%. But that was actually better than expected. They managed expenses well.
Okay. And margins. You mentioned gross margin improved.
Yeah, gross margin expanded over 300 basis points fourth quarter in a row. That shows the PRGP savings are starting to flow through.
But operating margin didn't fare as well?
Right. Operating margin contracted. That was because they actually increased spending on things like advertising, consumer-facing stuff, and also because the lower sales volume, especially in travel retail, hurt efficiency. The PRGP savings partly offset that, but not entirely.
Did they say why they increased spending if sales were down?
They mentioned pivoting quickly to adjust spending based on where they saw the best return, focusing on higher ROI opportunities despite the overall volatility. They also specifically mentioned increasing investment in China and the U.S.
Any wins on market share?
Yes, they highlighted gaining share in the U.S., China, and Japan. And Clinique had its 11th straight month of share gains in the U.S., which is pretty impressive.
Wow, okay. What about that beauty reimagined strategy they talk about?
Yeah, they gave an update on that. Said they're making good progress on the 5 priorities: accelerating consumer engagement, driving transformative innovation, boosting those consumer investments, fueling growth through the PRGP efficiencies, and then reimagining how they work, like giving regional teams P&L responsibility starting next fiscal year.
And the PRGP cost-cutting itself?
Still moving ahead. Confirmed over 2,600 net positions approved for reduction, aiming to streamline middle management by about 20%.
Okay. What did they say about the outlook for the rest of this year, fiscal 25?
They expect travel retail headwinds to be even worse in Q4.
Oh, really? Worse than down 28%?
That seems to be the implication for Q4 specifically. But outside travel retail, they expect the sales decline to continue getting smaller to moderate further.
And looking further ahead to fiscal 2026.
They sounded confident about returning to sales growth then, but with a big caveat: if there's a meaningful resolution to the new tariffs that were recently enacted.
Ah, the tariffs. How are they planning to deal with those?
They're actively working to mitigate the impact, mainly by shifting their supply chain. The goal is to get U.S. sourcing from China down below 10% by the end of fiscal 25.
Where would they source from instead?
Leveraging manufacturing in Japan and Europe more. They also noted that most of their U.S. imports actually come from Canada or are covered by other trade agreements, and Europe is the main source for most of the rest, so they're trying to insulate themselves.
Okay. And the overall numbers they guided for fiscal 25?
The updated outlook is for organic net sales to decrease 9% to 8%, gross margin around 73.5%, and EPS between $1.30 yen and $1.55.
All right, that's a lot of recent detail. So putting it all together, the strategy, the risks, the recent performance, what are the absolute crucial things people should monitor? The keys to watch?
Based on the Compasscope analysis and everything we've discussed, number 1 has to be China's economic recovery and consumer sentiment.
Still China at the top.
Absolutely. Given how much revenue comes from there, its health is paramount.
Okay, what's number 2?
Execution of the post-recovery growth plan, PRGP. Can they deliver those efficiencies and margin improvements? It's key to their long-term profitability.
Makes sense. 3rd.
Consumer behavior and demand for premium beauty products. Are people still willing to splurge on high-end lotions and makeup? Their whole model depends on it.
Right. And their main product areas.
4th, performance in the skincare and makeup categories. Need to keep skincare growing strong and find a way to turn makeup around and regain share.
Travel retail recovery.
Yep. Number 5, recovery and growth in travel retail. It used to be a high-margin engine for them. Getting it back on track is important.
What about the competition?
Number 6, competitor activity and market share. It's a fiercely competitive industry. You have to watch what rivals are doing and how EL is faring against them.
Digital growth.
7, digital and e-commerce growth execution. Vital for the future. Are they winning online?
Diversification away from China.
8, geographic diversification beyond China. Are those efforts in India, Brazil, etc. actually gaining traction? Need to see progress there.
Broader economic factor.
9 is the impact of inflation on costs and margins. Can they manage rising costs without hurting profits too much?
Changing consumer values.
10, shifting consumer preferences and sustainability trends. Things like clean beauty, sustainability. These are increasingly important buying factors.
Geopolitics.
11, macroeconomic trends and geopolitical risks, war, instability, trade wars. It all impacts global companies like EL.
What about acquisitions?
12. Performance of acquired brands and M&A strategy. Are acquisitions like Tom Ford delivering? What's their next move?
And finally, those disruptive, smaller brands.
13. Industry trends favoring indie and digital-first brands. Keep an eye on how these nimble players are reshaping the market.
Wow, okay. That is a comprehensive list. This deep dive has really covered a lot of ground on Estee Lauder.
Yeah, pulling together the Compasscope report and the earnings call gives you, I think, a pretty solid picture of where they are now and the road ahead in this really fascinating beauty market.
So for anyone listening who's interested in the beauty sector, maybe thinking about investments, these are definitely the core things to keep in your mind when evaluating Estee Lauder.
And remember, you can always go deeper. Check out their official financial reports, look closely at competitor results, build your own picture.
Definitely. And maybe a final thought to leave you with as we wrap up. How well can a giant company like Estee Lauder, with its clear strategic vision, actually navigate the twists and turns of unpredictable global markets and shifting consumer desires? It's that constant balancing act.
Yeah, between strategy and reality.
Exactly. Something to ponder as you watch how Estee Lauder's story unfolds. This content is produced by Compasscope.com. For more than 1,100 public listed companies, find detailed research reports, visual mind maps, earnings call analysis, and audio discussions on Compasscope.com.